there is potential for a very, very large amount of capital to flow into the crypto markets from an unlikely source, but it's not here yet. Hello and welcome back. The end of last week saw a fantastic rally in crypto markets, Bitcoin up around 7% from lows put in earlier in the week, carried along nicely by PPI data out of the US and the resulting increase in the likelihood of a 25 basis point rate cut at the November meeting. Just like I mentioned in the intro, there is potential here for even more capital to flow into the crypto markets within the coming months. But we're going to break that down in just a second. First of all, let's just take a quick look into the charts and remind ourselves where we are right now in the markets and how we got here. So as you can see, Bitcoin near enough flat over the weekend, a slight slump down from highs of around $63,500. After a rather sharp sell-off last week, characterized by long liquidations, we had this fantastic 7% up move on Friday after the lows put in at around $58,900. This up move was precipitated by macro tailwinds. We had good PPI data, which flipped expectations for that 25 basis point rate cut by the Fed and lowered expectations for no rate cut by the Fed at the next November meeting. S&P was up as well on Friday. And once again, this move was characterized by spot buying, okay? As you can see from the charts, the sell-off on Thursday, which was characterized by long liquidations, was a much sharper move. This move up was much more controlled, and that is, within a charting perspective, characteristic of a spot bid appearing in the market. We can see evidence of that spot buying on chain as well. This chart here is demonstrating that 1.5 million BTC has been accumulated by whales. That is defined as wallets with more than 1,000 Bitcoin in them over the last 6 months. That is basically since we put in the all-time high. We can also see it in the ETF flows. The 11th was a massive inflow day, which outweighed the last 3 consecutive days of net outflows. That was a $253.6 million net inflow day into the spot Bitcoin ETFs, of course, being led by BlackRock. BlackRock also beat earnings expectations, further bolstering the rise in the S&P on Friday's session. If we look over to fear and greed, you can see the market is feeling, generally speaking, much, much happier, now at a neutral 50 out of 100. Now, with all this talk of spot buying on the last move up, it's important not to forget that there is, in fact, still a lot of leverage in this market, a lot of people jumping on board. As we said, the fear and greed index is up. That generally means that retail and that speculative investors jump in with long leverage. But the leverage is pretty much balanced to both sides of the market, and that basically means we're in this kind of tinderbox situation where things could start moving very, very quickly, either to the upside or to the downside if some of these liquidations come in. And just to give you an idea of the numbers we're talking about, we're looking at $1 billion worth of long liquidations that would be liquidated, i.e. forced to sell at a price of $61,700. That is about a 1.75% move to the downside from where we are right now. And to the upside, there are $1 billion worth of short positions waiting to be liquidated at a price of $64,300. And that represents prices 2.4% up from where we are right now, in line with the high put in on Monday the 7th. Now that move would also, from a technical perspective, if I just zoom out, invalidate the downtrend that we have been in from the highs put in back towards the end of September. Do bear in mind that those short liquidations would come in at a price proportionately further away to the upside from where we are right now than those long position liquidations would come in. That means that the likelihood of a liquidation event to the downside is slightly higher than a liquidation event and a cascade of stops going off to the upside, at least from where we are right now as a snapshot in the markets. That being said, we can see evidence of spot buying, which kind of bolsters this move and makes it, in my opinion, a little bit more solid than if we just got here from the same scenario that I just described, i.e. a lot of short positions getting liquidated. So in the intro, I mentioned an unlikely source of capital which might be about to hit the crypto markets imminently. Where is this coming from? Well, yesterday, on Saturday, the 12th of September, we did have an announcement out of China about the need for and scale of extra fiscal stimulus on the Chinese economy. Saturday, of course, being a working day in China. And the result of that was perhaps not as exciting as some investors had hoped for, but I think it could be pretty bullish going forward. Let's break that down right now. So analyst expectations of what would be needed in terms of fiscal stimulus for China to hit its target of 5% economic expansion this year ranged between 2 trillion yuan and more than 10 trillion yuan. So obviously the most bullish result of this statement would have been, yes, we are absolutely going to inject X amount into the Chinese economy. But we did know that even such a result would need to be approved by the Chinese parliament, which is expected to hold a meeting later this month. So what was in fact the result of the meeting? Well, the result was generally positive, although they kind of kicked the can down the road in terms of putting a figure on exactly how much they were planning to stimulate the economy by. So we can see here, reported by Bloomberg, minutes of that announcement yesterday, China will borrow more to raise money and help local governments feed their hidden debt or off-balance sheet borrowing. Local governments can use the money raised from their special bonds to buy unsold homes and turn them into subsidized housing. Officials say there is still large room for central government to raise debt and for the headline fiscal deficit to increase. This is the key point here. But they refrained from offering more specifics. Attention will shift to the upcoming meeting of China's top legislature as soon as the end of this month for any announcement. And while Lan said local governments have 2 trillion yuan of funds, special bonds that they can use by the end of the year, this is very, very key. That is not fresh stimulus. Do pay attention to that. Reported here as well, the press conference didn't give a specific number on fiscal stimulus. The key messages are that central government has the capacity to issue more bonds and raise the fiscal deficit, and the central government plans to issue more bonds to help local governments pay their debts. The size of such a bond issuance will be released after it is approved by the National People's Congress. So China's still kind of teasing us here with this statement, of course. Officials say there is still large room for central governments to raise debt, but we're not putting a figure on it. We're just kicking the can down the road. I think this remains sufficiently positive to be bullish news, at least for the future. Of course, we're going to be watching how this plays out. But things could indeed get very, very exciting if a Chinese fiscal stimulus package does hit the economy in the future. And that would have to come in before the end of the year if it was to affect that 5% economic expansion target. China is, of course, a massive, massive player in the global economy. And despite its, should we say, anti-crypto stance, any increase in global liquidity would be very, very good, at least short term, for risk assets as a whole. And that includes crypto, of course. One to watch out for sure. We always like to be ahead of these things. As always, that is not financial advice, just my take, just my opinion, but thank you so much for watching. Plenty more to come. Catch you in the next one. Bye.